Okay guys, so tomorrow is a very big day in the markets because we've got the New Zealand Central Bank, which is expected to raise interest rates by 0.25%, which is 25 basis points. Now, the markets know that the central bank in New Zealand is raising interest rates because they have already been raising rates throughout 2021. But more importantly, they're expecting a lot more rate hikes in New Zealand going into 2022. As we've seen, the New Zealand dollar has been strong against the euro, the Japanese yen, because the interest rate differential is favoring investors to park their money in New Zealand or buy the currency to obtain an overnight carry when you buy the currency against other currencies with lower interest rates. This is why I've been talking about buying the New Zealand dollar against the euro, the Japanese yen, the Swiss franc, all the currencies with lower interest rates, because that's the optimal trade idea for us to make the most profit if we're trading in the currency markets. Now, moving forward after tomorrow's interest rate, what's more important is there more rate hikes coming? If the New Zealand Central Bank says after tomorrow's rate hike, further rate hikes are coming in 2022, and they confirm that the market's going to get even more bullish on the New Zealand dollar, and there's a lot of opportunities for us to make good profits from the currency. I'm already in some trades with my members, already shorting New Zealand dollar against the euro, for an example. We're already in good profits, and I'm waiting to double up on my trades if the central bank signals that more rate hikes are coming. So watch this video where I break down the New Zealand dollar, and if you want to come trade this with me and my members, you can come join my trading team on a 60-day free trial and follow my personal trades and learn as you earn, which is the most important thing, guys. So watch this video, enjoy the analysis, and let's see what happens tomorrow, and let's understand the forward language by the New Zealand Central Bank. Okay guys, so tomorrow we have the New Zealand Central Bank's interest rate decision, where the markets are betting that the central bank is going to raise the interest rate from 0.5% to 0.75%. So a 25 basis point rate hike is being penciled in by the markets. Now, we understand why this is happening in New Zealand, because inflation is at 4.9% and it's above the central bank's 2% target. So the central bank has to raise interest rates to bring down prices back to target, because if you let inflation remain sustainably high over a long period of time, it can become a self-fulfilling prophecy where consumers will start to demand from their employers that they pay higher wages so they can keep up with the rate of inflation. And then if they do that, then employers always start to raise prices on the shop floor to offset the cost of paying higher wages, and you get sustainably high inflation. And as we know, that just erodes the purchasing power of paper money in circulation. So the interest rates are going up to deal with this high inflation, and at this moment in time, we're expecting a rate hike tomorrow up towards 0.75%, but back into 2022, there's another rate hike expected in February, then in April, then in May, then in June, July, then in August, and another rate hike in October to take the interest rate to 2.5%. Now, as we know, that's going to make New Zealand's government bonds and the currency very attractive, because if you're an investor, for an example, in Europe, and you're getting paid no interest on government bonds. So if you buy a German government bond, you're getting paid minus 0.34%. You're actually being charged to borrow money to a government, where in New Zealand, they're going to be paying you 2.5%. So if you're an investor in Europe, clearly you're going to be looking for other places to park your money. And New Zealand next year is going to be very, very attractive for European investors. It's also going to be very attractive to Japanese investors, because again, they're getting paid no interest on Japanese government bonds either. And in Australia also, the interest rate is expected to remain at 0.25% into next year as well. That's what the central bank is signaling to the market. So what this means is that if we look at the euro against the New Zealand dollar, for an example, we have seen the currency pair trending lower throughout 2021, as we can clearly see, and in the back end of 2022. So it's been trending in the New Zealand dollar's favor, and we just got to understand the fundamentals behind that, and it's all to do with interest rates. So if you look at the differential in interest rates between the two countries, if we take Europe, which interest rate right now is minus 0.50 when you're trading the currency, and if we go to New Zealand and the interest rate does go up to 2.5%. Now remember how the structure of a trade works. For me to make money off the New Zealand dollar going up in value against the euro, I have to first own euros, sell my euros in exchange to buy New Zealand dollars. But at the moment, the interest rate is minus 0.5%. So if I borrow the currency for the euro, if I borrow the currency, I pay no interest for having to borrow the currency to fund the purchase of the New Zealand dollar. But if I buy the New Zealand dollar with my borrowed euros, I'll get paid 2.5% interest when I purchase the New Zealand dollars. So overall, I'll make 3% interest on that trade, even if the exchange rate doesn't move by a single inch over 365 days, which is 12 months. So basically, I can make 3% return on my money over a year just because the differential in interest rates. So clearly, this is why, if you look at the exchange rate, sorry about my cough, the New Zealand dollar is getting stronger against the euro because investors understand this interest rate differential. And let's say, for an example, over 12 months, the exchange rate goes down by 10%, as we've seen, and you get a 3% return. Now you can make 12% on this trade over a 12-month period. And 12% is a lot of money if you're a hedge fund with billions and billions of dollars. 12% on $1 billion is a lot of money. That's over 100 million, for an example. So you can understand why interest rate differentials are very favorable to sell the euro and buy the New Zealand dollar, or it's even more favorable to sell the Japanese yen and buy the New Zealand dollar, which again has been trending higher because, again, if I buy the Japanese yen to purchase the New Zealand dollar, so if we just do this trade the other way around, now that the Japanese yen is the quote currency, the interest rate in Japan is minus 0.1. So again, think about this when you're looking at and understanding interest rates. What we can see is if I borrow the Japanese yen to purchase the New Zealand dollar, I pay no interest basically on the yen that I borrow, and I sell it at the exchange to buy the New Zealand dollar, but I'm receiving 2.5% interest, so I'm making 2.4% interest. And now you understand why investors, because they understand this correlation between the two in interest rates, they're selling Japanese yen, buying New Zealand dollars, and the exchange rate is going up in value. So if the exchange rate goes up, for an example, in 2021 by 15%, which is a massive return, and then you get another 2.5%, you're nearly making 18% return on your money. And this is why interest rates are always driving the currency markets, because investors are going to be putting their money where they can get a capital appreciation in the exchange rate plus the interest rate differential, and that will give them a big return if you hold that trade over a 12-month period. So that's why I'm talking about buying the New Zealand dollar against the low interest rate paying currencies, because those currencies are going to be used as the funding currencies to buy the New Zealand dollar to get paid that interest rate differential. And because all the smart money in the market's doing that same trade, it will cause the New Zealand dollar to go up in value against the yen, like we've seen, by 15-16%. So now you get that capital appreciation and you get the interest rate paid on top of that trade. So it's really important to understand why interest rates are so important. Just think about it in reverse. If we sell the New Zealand dollar to buy the Japanese yen, well, I'm going to pay 2.5% interest for borrowing the New Zealand dollar and purchasing the yen, and I'm going to get paid 0.1% interest on the yen that I purchased. So basically, I'm losing 2.4% interest over 12 months. Who on earth is going to take a trade where you lose money every day you hold that trade open? It's the same for the euro against the yen, against the New Zealand dollar, because Europe's interest rate is negative and New Zealand's will be so high. If you sell New Zealand dollars and you buy euros, you're losing money every day you hold that trade open. It doesn't make any sense. So because of this, guys, if rates go up tomorrow in New Zealand and the central bank signals more rate hikes are coming in 2022, you can bet your bottom dollar the New Zealand dollar is going to keep grinding higher, because the smart money is going to keep chasing that higher interest rate differential, as I just explained to you. So I'll be buying the New Zealand dollar against the Japanese yen, I'll be buying the New Zealand dollar against the euro, and I'll be buying the New Zealand dollar against the Australian dollar, as long as markets do start to follow what the Australian central bank is saying about no rate hikes in 2022. And you can clearly see this currency pair has been trending lower throughout the whole of 2021. So again, the New Zealand dollar is getting stronger against the Aussie dollar, so we could get another push higher to this trend line and we could sell off the trend line. So guys, if you want to come trade this with me, come join my trading team, come understand the fundamentals behind the currency markets. It's all about fundamentals. Then we can use technical analysis to time our trades. Send me a message. I'll give you a 60-day free trial. We'll show you how to open a trading account, show you how to place trades, show you how to follow my signals, and you'll get some video analysis like this so you can learn as you earn during your membership over a 2-month free trial period. So guys, I hope this made sense. Thank you for watching. That's my analysis on the New Zealand dollar ahead of tomorrow's interest rate decision. Thank you.